Right now, to discuss that mix of global and local market news, I am joined via Skype by Mila Mafanya, the Interim CEO and Head of Equities and Corporate Strategy at Afena Capital, and also Leigh joining us in studio. He is the Wealth Manager of AlphaWealth. Gentlemen, thanks so much for your time. I mean, not the best Friday to wake up to following the news out of the US. Donald Trump not happy with the way negotiations are going so far, saying, I'm not happy. You guys, China might get an additional 10% tariff as a result if you don't move quick enough. Markets are not liking this. Leigh, how are you interpreting the situation, and what moves are you making to try and protect any form of value that you still can at this stage?
Sure. I think it's very important to take a step back from this and not get wrapped up in the panic. We're coming off pretty much all-time highs across the S&P 500. We're double-digit territory for the NASDAQ, the S&P, the Dow. So a 1 to 2% break over the course of 2 days is, I don't think anything that should make people run for the hills. If anything, if you look at the external risks over the sort of medium to longer term period, you'd probably be more likely to look at Iran or to look at Brexit as bigger risks. For me, this is big stick or carrot from Trump trying to get the Chinese to the table to really conclude a deal going into 2020, which I think is the longer play. So really, you know, it's actually a buying opportunity for me. The market doesn't give you too many chances when it's been on a rampant run like this.
All right. I mean, Mila, Leigh in studio here saying that this is a buying opportunity, that investors needn't be running for the hills, except that is what we are seeing right now. Many stock markets are posting quite big drops. A lot of activity going towards gold and other safe haven assets like the yen. Is that what you are doing, or are you also seeing this as an opportunity to scale up further in this market?
Hi, Fifi. Thanks very much for having me on the show. Yes, I certainly wouldn't react on client portfolios, I think, on this type of news. I think this is certainly a rhetoric we've become accustomed to over the last 18 months or so. And I think we just in a new world trade order where we are likely to see a lot more of these volatility flare-ups on the back of the way that President Trump does actually negotiate with China. So, you know, there are probably two camps here. So there's some people who think this is all about, you know, political, politicking essentially for his voting constituency. And it's likely that you'll see this trade negotiation continue right up until the elections in 2020, while others think it's just a tactic to try and bully the Chinese into an outcome.
Okay, so in terms of seeing it in your view, as this is an opportunity to get into the market, where are you seeing opportunities most attractive? Because we have had quite a number of results coming out of corporate South Africa this week, from the retail to the financial services and also the mining guys. Any of those tickle your fancy?
Unfortunately not at the moment for South Africa. I think we've discussed it, and there's structural issues for me that need to shift in South Africa in order for it to become more of a risk-on play for me. Also looking at the sort of multi-manager space from an asset allocation point of view, I haven't seen any local multi-managers actually ratchet up their exposure to local equities. Offshore, it's a US and China play for me, and that's really looking at real growth, so the comparison of GDP to inflation. And those two areas are really areas that stand out for me. I also think that we've also got a bit of a hangover from the Fed from this week as well, where the commentary coming through from Powell was such that it was, this isn't going to be a long-term sustained decrease of interest rates. It might just be quite short and punchy.
Although some believe that this latest move via Trump or from Trump to slap on tariffs might, or is him sort of inadvertently putting extra pressure on the Fed to do more.
Yeah, potentially. But, you know, we've also seen the dollar strengthen from the fact that we've got the carry trade unfolding, which is a high amount of sort of nominal savings in Europe that they're getting negative interest rates for. So where do you park your cash as an international investor if you're concerned about taking risk in the equity markets? So it flows into gold, it flows into the dollar. which is why we've seen the rand blow out this week, particularly over the last 2 days, because we've got that double bubble effect of both the Fed and trade wars overnight.
And then, Mila, is Afena Capital also as downbeat as Leigh Riley here about South African equities, or are you seeing some value in the local market, particularly from some of the names that did report operational updates this week?
Yes, I think the way to think about it is that, South Africa is essentially a emerging market economy that has a developed market, equity market. So the way to think about it is that, there's a significant exposure to offshore companies that you have in South Africa. And during times like this, when, certainly the market is certainly risk off, you might be attracted to some counters, for example, that have historically done well in these environments, like British American Tobacco. So that is one that did report their results yesterday. And, the results were pretty much in line, but there were, I think, a number of green shoots to become a little bit excited about. Certainly batting away the prospect of the FDA coming back with any sort of measures during the course of this year. They are seeing upgrades from a margin perspective, as well as, currency tailwinds that we're seeing, just given how weak the pound is currently with the Brexit overhang that you currently do have. And it's currently trading on some of the cheapest multiples that you've actually seen in the last 10 to 15 years. So for us, that would certainly be a stock that is an attractive proposition.
So British American Tobacco looking attractive for you. What about something like a SAPI not having the best day yesterday? Investors really punishing that counter on the back of that acquisition it's making. Looks like quite a lot of money that you guys are not comfortable with. Your take?
So yes, SAPI has been a significant underperformer in the South African market. I think it's fallen over 50% over the last 12 to 18 months. And there are significant pressures that you are starting to see, certainly in the packaging paper market, that are starting to play out. And I think the real big disappointment for the market yesterday was the announcement that they're actually going to be taking some downtime in the fourth quarter, which is traditionally one of their stronger quarters. So certainly in terms of the downgrades that you should expect coming from the market, you should be seeing fairly material downgrades coming in terms of consensus earnings.
All right, Leigh, I mean, bringing it back to you and the reference that you made about the currency, there was a view from an investment house that should the Fed cut, as has been the case in the past, we could have a blowout in the rand, which is a move around 30% or so against the dollar. The rand has been significantly weaker this week. Where are you seeing it test next, and what do you think the main drivers of those moves in either direction could be?
Sure. Another 10 cents, I think it becomes the next level for me, so at 14.80. And then you've got 20 cent increments for me between here and back down to 14. As the news starts to get digested, or as we start to see it become a sort of new normal in terms of how transparent things are from a downgrade point of view, or how much the taxpayer is going to be taxed for bailing out Eskom. I think those are the flashpoints that could push the rand back above 15 again. Unfortunately, it's been a currency that's been the most volatile this year out of the emerging market currencies, not far behind I beg your pardon, slightly in front of the lira. So it's with currencies, it's always tough to call. We see a lot of flow and we see a lot of action every time it hits around the sort of 14 mark. So that kind of seems to be the line in the sand for South African investors who are trying to move capital offshore at this stage. But currency is one of those ones that you can never really get right, because you're always looking at two separate governments, two separate interest rates. It's always very, very challenging. And we, in the last 2 years, have been swept up in this emerging market story, in particular in the tariff wars and trade wars cycle. So it's an ugly one to try and call for anybody.